What's going on, guys? Kevin Cage here with another crypto update. We're going to run through some rapid fire news today for the XRP Ledger, Ethereum, Omni Network, HBAR, XDC, etc. Alright, so first up, we're still seeing this in the headlines. Trump administration's plan or consideration for 0% capital gains for US-based crypto assets.
Crypto to the United States Treasury, a person who pledged to make crypto tax-free. I mean, think about all these incredible things.
So there's been more chatter about this over the past couple days, but this original clip was shared by Sean here a little over a month ago. And for reference, if you go to coinmarketcap.com, you come to cryptocurrencies, then you go to categories right here. We can actually search the category right there for Made in America, just to look at any United States-based crypto projects. Now, we don't know if this for sure goes through, but we do know that the Trump administration has been making different comments about this and considering 0% taxes for crypto-based projects, which would be huge. I think that alone would lead to a bunch of capital inflow. And if you look at this list, we can see their token rank by market cap right here. I mean, there really are a lot of US-based crypto projects in the top 50, top 100, etc. So really big opportunity, I think, for the entire crypto space. So here on the screen, we have some bullet points of this story highlight saying that non-US crypto projects may face a 30% capital gains tax, creating a clear advantage for US-based ventures. And if anything like this goes through in the future for 0% capital gains for US-based crypto assets, I know XRP HBAR, as this article highlights, that would be really big and ideally boost a lot of growth in the US. So this alone would have a bunch of ramifications. It would give the United States crypto firms a big advantage or a cost advantage over international competitors, creating some competition versus the crypto hubs in Singapore, Dubai, the UK, etc. And this could lead to lower operational costs, giving some companies more competitive salaries, attracting better talent, and hopefully even lead to new startups being here or maybe even existing companies relocating to the US. So I don't know exactly how that would work, but definitely interesting. And with this new administration and Gary gone, we still do need regulatory clarity. We need regulations that don't limit the growth and are flexible with this technology because, let's be real, it's going to keep evolving. And one last point is whether you are in the US or outside of the US, I think this would be a very positive development. And what we want is actual regulation that allows innovation so we can have more nodes and validators right in the US, because I think this would improve tokenization, RWAs, and a bunch of Web3 apps. I saw this shared by King Solomon, so highlighting SBI VC Trade, a subsidiary of Japan's SBI Group, is set to enhance services for XDC and HBAR in 2025. So we linked this right to sbigroup.co, and we can see this was shared back in November, so let's pull this up. So very cool to see that. Should be no surprise, and we have a couple other assets included in this list, and they do list XRP in this blog like most, so we can see XRP, we have Ripple, and right there. So we have this really interesting thread. This is shared by Tyler Tarsi, who is CTO over at Omni Network. And if I'm not mistaken, Crypto Eddie did an interview with a gentleman over at Omni Network. I follow him on Twitter, but I'm blanking on his name. So he's discussing the XRP Ledger, and what's interesting about Omni Network is a lot. I'll probably have to do a deep dive. I know there's a lot of great videos out there, but Omni Network is also a US-based crypto asset. And Omni empowers developers to access users and liquidity across all rollups without smart contract upgrades. So I'm going to tie this with the XRP Ledger and Ethereum. Here's the video. So this is the founder of Omni Network, Austin King. If you haven't watched this already on Crypto Eddie's YouTube channel a month ago, it's really interesting. And I thought this guy was extremely well spoken and very intelligent, and he has a background too, not just Interledger, but the team Ripple and the XRP Ledger. So I want to get back to this thread, but basically Omni Network and their team seems to really like the XRP Ledger, and we can see some of their backers include Pantera, Spartan, Jump, and Coinbase Ventures. We can see right here Ethereum unified with plans to support a bunch more networks besides Ethereum and just a few layer 2s. So back to Tyler Tarsi, the CTO over at Omni Network. The XRP Ledger processed over $3 billion in trades last year. However, most people don't understand that it's pursuing a completely different playbook than other DEXs. Having built trading algorithms for JP Morgan, here's why I think that strategy might pay off. Over the past few years, trading volume on DEXs has skyrocketed. However, no top-tier banks or hedge funds are using them yet. Under the new Trump administration, this might all be about the change. Here is why I think the XRP Ledger DEX is uniquely positioned to lead. Since the beginning, the DEX on the XRP Ledger was designed specifically for institutions. It was purpose-built for the highest volume, bank-friendly, tokenized assets like the Japanese yen, the euro, the British pound, and the new stablecoin, the Ripple US dollar. And yes, I'm going to be reading most of this thread verbatim just so we get his point across, so we can see the real unlock is something that most people aren't looking at though, and he's referring to this. When I worked with the trading desks at Barclays and Millennium, one thing was clear: if compliance says no, you cannot place the trade. DEXs today lack any compliance functionality. And this holds back top banks and hedge funds from getting involved. How is XRP fixing this? You are aware that one of the XRP Ledger's newest upgrades solves exactly this: permission domains. Now, what I'm about to read here makes me think that this could potentially be involved with some of the big rumors we've been hearing about XRP in the US. Soon, top banks and hedge funds will be able to trade in a regulated, compliant manner on the XRP Ledger. This could be the missing piece, and we're already seeing early success. The $3 billion in volume happened without the compliance problem even being solved, and soon the permission domains upgrade might be the key to unlocking this next stage of growth for XRP. And Tyler says it's possible that top banks could bring a 1000x volume difference when on board. Having worked on both large-scale traditional finance and crypto systems, it's clear to me that these will converge sooner than most people understand. So I thought this thread was interesting and I did want to share. So basically, to summarize, Tyler believes that with permission domains for the XRP Ledger, this could allow for banks and hedge funds to trade in a regulated manner and allow for volumes to potentially 1000x. And historically, if volumes on the XRP Ledger go up 10x, 100x, or 1000x, XRP is the native token on the XRPL, so it likely goes up. So what are these permission domains on the XRP Ledger? They've introduced a feature called permission domains as part of its ongoing efforts to enhance compliance and security. This feature allows the creation of controlled environments within the XRPL where specific rules and credential requirements regulate access. And here we can see for on-chain credentials, so XLS70D or this discussion, we also have XLS80D, permission domains. So permission domains allow certain areas or domains within the XRP Ledger to have specific access rules or regulatory requirements. As an example, permission domains can restrict participation to KYC verified accounts. This helps regulated financial institutions adhere to their compliance requirements while participating in the XRP Ledger. And last point, because I like this right here, by integrating permissioning features directly within the DEX protocol and other parts of the XRP Ledger, regulated financial institutions can participate in the XRP Ledger's DEX while still adhering to their compliance requirements. So hopefully I don't lose you here because it gets a little techy and I'm reading off another screen just to make sure I hit the bullet points accurately. So we can go to the GitHub and we can see under the XRPL Foundation or XRPL standards, we have XLS80D. So this is a discussion or a proposal today. We can see another proposal right here in the GitHub for XLS81D permission dexes. So this is actually building right on top of XLS80D permission domains. And really, to break this down as simply as possible to track the amendment process and what this actually means. So you can go to xrpscan.com, you can come up to click amendments, and then we have a full registry of all amendments, those that are not enabled, those that still need another 4 days to reach an 80% threshold for consensus, so we're there. And we can see the amendments or the features and upgrades that are live on the XRP Ledger mainnet today, right there, with yes. So please correct me if I'm wrong, but I still believe that permission domains is still a proposal, so it needs to go through the amendment process. So what this means is the feature is developed, it's tested rigorously on the XRPL devnets, and then at that point, when it's ready, it's proposed as an amendment. So once we move from that discussion proposal phase, it's proposed as an amendment, and then validators on the XRP Ledger have to vote. So we need at least 80% support for 2 consecutive weeks, and then if that's the case, then it becomes live on the XRPL mainnet. So that's basically how upgrades on the XRPL work for the amendment process, and this is all about decentralized consensus. Hopefully I didn't lose you there. We're going to dive into some other stuff, but I did want to just go high level on how this works on the XRPL. I think it's important to at least have a rough idea for any networks that you're interested in. So we touched on the XRP Ledger and briefly touched on Omni Network, and we're looking at Ethereum. We are sitting at $400 billion in market cap, yet to actually break into an all-time high price for the ETH US dollar price chart as well as market cap. We have an all-time high market cap around 570 billion. Now I've seen some FUD and some very weird tweets from Vitalik of Ethereum. I'm hoping that that is just FUD and that Ethereum still does the usual cycle and blast an all-time highs this year. And I hold some Ethereum, and if you don't, all good, but the reason I want Ethereum to perform, even if you're just in alts, is because last cycle when Ethereum got its first major move, that big monthly candle over the previous cycle top, that was timed exactly with the biggest crash of Bitcoin dominance when alt season picked up. So usually when Ethereum starts retracing up, that's good for other assets, especially ERC20s, DEXs, other DeFi tokens initially. And not financial advice, but I don't think Ethereum is going anywhere. We can see that they have flipped P&G's market cap. So I'm not one of those XRP holders that's just all into XRP. I also want a bunch of assets to perform, but you are damn right that I am hoping that XRP flips Ethereum's market cap again because it has happened twice. But alright guys, I hope you enjoyed today's video. I gotta upload this video super quick because I gotta run to a haircut that I delayed too long. And right here, I do want to make sure that I go over David Sachs in the next video because there are some really interesting ties. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.